All right, family, what's the vibes? How you guys doing? Let me quickly share so that we get to the business of today. Today, we are going to be learning something very special, and this is one of the things that's kept me consistent in the game. And I know that, for so many of you that will be watching the video right now, this is probably the last bit of ingredients you need to kind of nail consistency, right? And it's a topic that it's been said a lot but not been implemented a lot, and it is journaling, right? And what I'll be going through with you today is how I journal my daily reviews, right? So every single day, because I'm a day trader, I pay attention to journaling at the end of every single day. And if you want to find consistency, if you want to be able to see ahead of time, right, you need to do your daily journals, right? So it's one part of journals, or it's one part of journaling that I do, right? There are several ones, but we would focus on the daily journal today, right? And this is journaling every single thing that's happened inside of that day, right? And it is figuring out what the day exactly was like, whether you were trading or not, you want to do this journal, right? So let's get into it. So before we actually look at what, the before we look at what happened today and journal that, right, we would look at what happened yesterday and how I journaled it, right? So this is something that I've been doing since how long now? Years, right? 3, 4 years. I would say I've been consistent doing this every single day. Obviously, some days I falter, but I make sure to come back and still do the study. I've noticed that when I do this, I'm much more in that flow state that we all like to be. That state where you kind of can read what the next step is and just follow through with price. It only comes when you track, when you actually can follow through on price, right? One of the things that you would understand and know as you trade or continue to trade is to really understand what is to be, right? You need to understand what has been. Many times nothing is really entirely new. It comes out, or it forms up, or is created from something that is already available. And this is not just trading. This works with so many other phenomena of or so many other things in life, right? Let's look at yesterday, Monday, right? Yes, I was journaling. Obviously, I have to journal. So I haven't taken any trade this week. Let's put that out there. But I think I have ideas now, and we're also going to get to that. So stay with me on that. Trying to load this up. Sometimes Notion can be very slow. Wow, empty. Why? Okay, I think we have two there, so maybe it's the second one. All right. So it's the second one. So what I do is I go in and I pinpoint what opportunities were available inside of this day and what exactly was the catalyst. Was it something I could have, anticipated beforehand? What could I have done? And I also look at, that's the first thing. Then I also look at what time did those opportunities played out? How long did price stay at the entry point before it moves? All of these things are important to you as a day trader because you want to have data on how every single day plays. Remember, one of the things that you again see as you continue in this game is you find yourself in a particular day where price is showing you something that you can tell that you've seen this before. Like it's just so clean, it's just so alike to something you have seen in the past. And many times you still don't know how to end that. You still don't know how it ends, because if you know how it ends, then it is called A plus setup, right? When you see it and you're like, oh, I know what this is and I know how it ends, it becomes your A plus setup. You're comfortable with risking, you're comfortable with waiting, you're comfortable with seeing the trade through. But if you see that and you actually can't say, oh, I've seen this before, but I don't know how it ends. I still don't know what to do. I'm still lost. It's because you probably did not journal that idea the moment after, or after the day you saw it, you probably did not journal and look through it properly, or you took that trade and you did not see it through. This is one of the reasons that when you take a trade, you want to be able to fulfill the plan of the trade so that it becomes in register that, oh, I have done this before. And anytime, you are in such situations, your mind can recollect that, oh, we've done this before. And because we saw it to the end, if we do this particular thing, it leads to a loss. If we do this other thing, it leads to a win, right? And you can make decisions off of that, right? So this is the reason why daily journals are important. I'm trying to explain to you. So again, the first thing I look at is what opportunities happened on this particular day, right? And I like to do this journal on the 15 minutes time frame. I like to do it on the 15 minutes time frame. Many times I would switch lower if I find something interesting, maybe to the 5 minutes and maybe to the 1 minute. And if I find something interesting, I would then, journal that, right? So again, this was yesterday, Monday, right? Price consolidated at the open, right? That was Friday's high there, right? We opened on Sunday and we started to consolidate going into Monday, right? Now, London session, we're consolidating and then we broke lower in London session, taking out sell side liquidity here, closing through sell side liquidity here, right? When I see consecutive candles close below two lows, 1, 2, and we see a close below 2 lows, this is high probability for me breaking market structure. So when I see that, I'm waiting for price to return back inside of that range and do business. Now, where price was reacting off of, I wasn't taking any trade yesterday, right? But where price was reacting off of for the sales of yesterday, right, was 1 at the Asia's low. Asia's high are key levels like your order block and fair value gaps, right? The key levels like that. They are reference points. Yes, that price can move towards and move away from. So price return back to there 8 a.m. right EST. That's 1 o'clock our time in Nigeria here, and then returns back to bounce here by 9 a.m. Now the reason why this is important is price has got into the entry and doesn't just spool away. It takes 1 hour, right, dancing around and returns back to the same entry. So for guys that the moment they take your trade and it goes into a little bit of profits, they move to break even, this will stop them out and they miss out on all of this move. So price goes there, right, takes 1 hour, returns back into that level, bounces. There are a whole lot of things here that I marked out here. The mitigation block. The mitigation block is the low of the failure swing. This is a failure swing. It's a failure swing because this high fails to take out this high, even though we know that there's buy side liquidity resting here. It's an indication that there's more sell side liquidity to be taken, or sell side liquidity is at a much more advantage to the algorithm than buy side liquidity. So price would fail to take out old highs and then edge for what? Old lows. Now, the low before that run higher, the low before that retracement higher, when it's being broken through by a break of market structure, or when it's being broken through here, consecutive candles here, right? When we have a breaking market structure, that low is important. I like the bodies, right? So you see price return back into the bodies here, right? It's the same thing here, they are the same thing. We have mitigation block. If you trade retail, you probably know this level as resistance, right? I only just have a better understanding of why it's resistance, why it should pull price lower, and this is what I'm explaining to you, right? So we're both in the same camp. Price returns back into that level and then we see price breakthrough. There's so many other things to think about here. Why does this OB not work? Well, because we are bearish. Bullish order blocks, valid bullish order blocks will fail when price is poised to go lower. Price breaks that bullish order block, it becomes what? A breakout, and price falls. Now I have this line inside of here. When you see dotted lines on my chart, it means an area where liquidity is resting. Obviously, this will be sell side liquidity. That means I want to see price return back into this level. When you see these tick lines, I'm looking at price get to that level and then respect them. So that's kind of like how I annotate my own charts. Everyone has the different ways that they do that. So I came into the lower time frame here, 5 minutes, and I'm doing the same thing, right? Looking at those same levels and looking at how they look on the 5 minutes, it looks much more cleaner. We have breaking market structure here, we have fair value gap, we have mitigation block also here, we have price run out old high, and it shows me that if I was in London session, I could have gotten a trade at 350. Now, on the 15 minutes, that did not really quite, that was not quite the case. We didn't see that, there was an entry here. right? But on the 5 minutes, we can see a run above an obvious order block. I will teach this if you want me to talk about this more, how I think about order blocks, how I pick them. Just right now, go into the comments and say OB. Just write OB, and then I will know to make a video on that, right? And I can do that tomorrow for you, right? So price gets into that level and breaks lower, fakes out sell side liquidity, returns back into that level again. 8 o'clock, we see that level. OB price returns. 9 o'clock is that candle, and then price flushes through. So this is a detailed journal that shows me what exactly played out on GU. I now know that, oh, the prior price action of GU Monday was what? Bearish, right? And I also know that there is a drawn liquidity, which I showed you here, right? That price could still reach for. So what is the bias, or what am I thinking about going into, the next day? I'm thinking about a run to these lows. So let's actually go back into price and see what Tuesday actually played out as. Let's go back into price and see what Tuesday played out as. Okay, all right. So let's go back to Monday, right? What we just watched stopped somewhere here. Now, with this chart, you'll be able to see why this had the dotted line. This was the dotted line you just saw right here. Right, the reason why the dotted line is here is because we have Asia's low. Remember, I told you Asia's low is a reference point, just like your other blocks and your fair value gaps. They're levels where you want to see price run to and move away from. So we have Asia's low from Friday, we have Asia's low from Thursday, left open. And during the Asia session, no pun intended, right? During the Asian session, we see price return back into those levels, crush them out. Now, this was quite painful because this was the exact, if you watched my video yesterday, I told you how these are my levels for the week, but I want price to take our buy side liquidity first before it does that. And I told you, if it does it, if it runs lower, which is a possibility without me, right, it'll be painful, but I will not lose any money, right? And this is just, as a trader, you need to pick your poison at some point and say, okay, well, I know this can happen, but this is what I would like to see before I engage. And sticking to that just keeps you ahead of the game, right? Not losing money is a better position than losing money. It's a better position. Or waiting on your hands is a better position than losing money. That's the way it's being said. All right. So with that being said, we have to backtest, we have to journal together what happened today. All right. So today, very quickly, we had right from the open, after price took out sell side liquidity. So boom, price takes out sell side liquidity, right? Daily low, right? Huge daily low inside of here. Right, let's go to daily so that we see that. Returns back to 3930. This is a down close candle. So it takes out that low and immediately sees a rush to buy side. Remember what we talked about? Every time price takes out sell side liquidity, right? It is food. It is food for buy side delivery. So we saw sell side liquidity being taken out there. And then what happens? Price jolts higher. Right. Around this time, somewhere around here, I was already getting to sleep, 3, 4 a.m. Right. That's really when I take my nap. I like to work at night, and many times I shift it, but right now it's night work, and that's why this video is coming, midnight. Currently it's at 1:05 a.m. in Lagos, Nigeria here. Right. So look at this. The moment price saw that push or that sweep of sell side liquidity here, what happens? We see consecutive candles. This is a good sign for continuation prices higher, right? So what we want to mark out here is if we really were going to see continuation, we will see fair value gaps hold price higher, which we saw here. So fair value gap, we mark fair value gap. Now, this doesn't mean we should have traded it, but it would have just been an indication that, oh, around this time, 145, we saw this jolt high, right? I wouldn't be trading London session 145. I would kind of wait into, 2:45, 3 a.m. before I start to look at something. So I'll probably have missed this mood regardless. But I like the detail here showing that right from that run on sell side, we saw an expansion going back into buy side. Now we see this is a breaking market structure, right? And just seeing this, right, I knew that London session was out of the picture. When I see, and this is also for you, and I'll tell you the reason, right? When you see price expand right before a session, right, think about what that session is supposed to act like. Many times the session is going to be a consolidation because there are only two behavioral patterns of price. It consolidates and it expands. So if it expands before the session, what do you expect the session to do? consolidate, right? It starts to expand again when the next session. So consolidate or expansion, consolidation, expansion, consolidation. Right. So it's a way to think about price and just take you away from seats that you should not be. One of my plans for anyone watching, these videos is that you are able to understand conditions. It's the biggest thing a trader can hold on to. When do I need to do the thing that works? When do I need to stay away? Like just that just sets you right, because you can know everything, but if you do what works at the wrong time, you still keep taking losses, right? And this is one of those conditions here. So look at what happens, right? We have that consolidation, but something interesting happens here, and I would move you to the 1 hour time frame. All right. As especially if you trade lower time frame, you don't want to be stuck on one time frame. You want to be able to move into the higher time frame and kind of get information of what's happening and then use that to dial, right? Me and my family, the inner circle, we were working through this afternoon, right? And certain things we look at, which I would show you, right? Look at price returns back inside of this level, 5 o'clock, right? London session just wrapping up there, right? Tries to expand, right? Going into New York session, and then New York session starts and price is returning back to take out sell side liquidity inside of a breaker. We took out sell side liquidity here, right? We expand above an old high. So the up close candle before the run lower to take out sell side liquidity is a what? Breaker block. Again, if you want me to talk about breaker, just write breaker in the comments, and then I know I can explain more about it. I can show you exactly the types of breakers to not pay attention to, and the ones that you want to really, really sit with. Right. So that's a good breaker inside of there. The breaker is this candle, that up close candle here. Right. I love what happens here. Right. Look at this. Price returns back here, not the session. So you would have taken this trade and you're expecting price to go higher. Now, again, people that take trades here outside of the session, and many times the people that would also be moved to move their stops. Again, I'm just making an hypothesis here, right? And it's because I've been in that camp too, right? But if you waited for the New York session, you'd see this and it'd be a much more better entry. When we have, again, if I'm thinking about buy side and price runs out sell side liquidity inside of a key level, that's more reason for buy side to be expected. All right, that's like, again, like I said, when price takes out sell side liquidity, it is food for buy side delivery. So we have run on sales here. That would be the trade. Run on sales, and then we have buy side liquidity, here. So what could we have expected? We could have expected maybe, all of these highs here, and maybe more, but it depends on what your risk to reward here. Now, this is tricky. I have one of my guys that, was going to take this, but didn't know where to put his stops. Now, for this, because we already had the run on sell side liquidity inside of this, I would take my shots by taking my stops down here to this candle. Right, so I'm expecting just a partial run into the fair value gap, which has been done here, and then a rerun on that fair value gap at the time. So we're looking at this and I was saying, this is already gone for buy side, right? So we saw that happen, right? And we can kind of plot levels. I know my chart is messy, but I'll clean it up right now. Let's take this guy out. That will be one level of liquidity. In fact, that will be where I would take majority of the trade out. Now, this is a 1 to 6 in this case, right? And when price gets up here, it is a 1 to 4. So up here, I'm good to take a 3% out of the 1% that I invested and let the remaining or remainder run. Now, if you look at this trade, it shows that price actually did not get to the final TP. This is something I talk about a lot, right? If you really think that the game that you play is uncertain, then your ideas also do not have certainty, right? And we see that play out every single time. And that's why one of the ways to keep consistent in the market is pay yourself as the market delivers money to you. That's going to be this case here. So we have the time here, right? 8 o'clock. Right, so I'm gonna have 8 o'clock. Right, again, as I'm walking you through the journal, because this is exactly how I'm thinking when I'm doing my journals. Right, I'm trying to understand what exactly really played out, and how I understand it with the knowledge I have, right? And then I take a screenshot, right? So 8 o'clock, that would have been a very good entry, right? This is the work here, guys. The work here is being able to understand more than chase, right? Many times what we do as traders is chase, chase, chase. Where's the next money coming in from? Where's the next this coming out from? But many times all you need to do is to be in flow. All you need to do is to understand what did the market do today, right? Because you would start to see a repetition of those ideas just play out over and over again. And that way you're able to just stay in a box where you can just continue to aim for something or look for a particular thing. At the moment it plays out, you know that, oh yeah, I know what to do. Right. Again, as you follow through, you'd see, these things that I'm explaining here. So let's go back to the chart. I think we should go back into the 5 minutes and the 15 minutes and see if we have where's trading view? Trading view share. All right. Okay, we're back here. Right. So now that's the first thing I do. I highlight the opportunity, right, which I just explained with the breaker here. Then I highlight the time, right? That's the next thing I do. There's one more thing I do. The other thing I do is I highlight what are possible levels, right? Just like we saw here yesterday from the previous one I just explained, right? I highlight what are the possible levels that, price can reach for or draw to, right? Those are the levels I mark out, right? So for one, I have this level, right, as a level that I've talked about for a while. Now that we're figuring out this sell side liquidity, it's kind of, um, um crazy to me, but I'm still of the opinion that we can still return here since we have NFP on Thursday, right? So NFP on Thursday, right? In those events, we can see, big sweeps on buy side or sell side before price returns. I see this as a buy model where this is the original consolidation. We have seen smart money reversal, breaking market structure here. We're using the broker breakout. We've seen an expansion. Now, the invalidation to this is we just keep going lower, right? And like I explained to you, some days or yesterday, the fundamental story still puts dollar bullish and puts gold bearish. So I'm bearish on gold, right? I'm really just looking for a good place to sit in. And I think, one that will be very comfortable will be above this highs, right? And I'm going to wait for it. So that's a level that I'm watching to look at so that we just have that already annotated since we can see it on this time frame. Right. Now, as we go into the lower time frame, we want to just consider those levels that we talked about. We have a run on those lows as we see here. This time here is 8:45. So we just see it on the 1 hour as 8 o'clock, but it's truly 8:45 that this move happens. And it was a very, very quick move that lasted for almost 2 hours, right? We took almost 2 hours before we got to this high. And that's a good thing, right? It's a good trade, right? You would have taken good partials and then price reverts lower. Now, how did price go lower? We saw price react off of a bearish order block. It's good to understand every single thing that happens on that day. That's really why you are journaling, right? So that you can know exactly what happened on that day, right? A good study here is we had run on sell side liquidity inside of a PDRA or a reference point or a key level or a POI, and we see price expand. Now we are seeing also that when price took out that high, right, we saw price expand lower. So what does this mean for us, right? It means that we have a trade idea also here, right? So if you were looking at this at that time, right, as someone looking for shorts in the market, maybe because we took out Asia's high and you're expecting a return back to Asia's low, right? That's a play, right? That's an idea, right? I like to see them as ideas because they don't need to get fulfilled for you to make money. They just need to make sense. Run on buy side liquidity, run on buy side liquidity, Asia's high, this high to this high to this high to, and look at the time, guys. The time there is 10:15, a very interesting time if you're trading the currencies if you're trading gold, right? So price gets to that level and that would have been trade two. I like this one better because the invalidation is quite interesting. Price is returning back into a bearish OB. So you're looking at the high of that OB, right? Or if you want to be generous, you can give it this other OB too. And then you're expecting price to return back into, this low will be good and it gives you a 1, 2, 3 there. Right, and that trade would have just been, wrapping up just right about now or some hours before we started this call. Right, but these are the entries we kind of like see on this time frame, and we can take that screenshot and then go into. We can take that screenshots, go into the Notion, right, and then put that in. Now, if you want my Notion template, I can send it to you for free, right? Just make a comment in the just make a comment. Yeah, just make a comment and I'll add the link to the next video. I'll add the link to the Notion template. There's a whole lot you can do with it, right? But we don't have time to look at that. So we've posted this in, and then we want to go back and look at I want to go back and look at TradingView, right? So if we cannot look at like 15 minutes, I'll also look at 5 minutes. All right, I'll also look at 5 minutes and just look at those levels again, right? Now on 5 minutes, I see something interesting. After price took out that low, peradventure was not there, 855, right? And I'd seen that low and we see an expansion higher. There's something else that we see. We see price return back into down close candle, and that would have been another opportunity. It's kind of like the big thing for day traders, that you are able to find, a grace, right? A re-entry that's very close to the entry, and maybe one that even gives you room or gives you speed, right? Look at this, right? This happens 9:35, trade finishes at 10:50. So if you took the trade here, you'd have waited 2 hours. If you took it right very close to where you see the same entry at 9:35, right, it would have taken you less than 45 minutes, right? But 9:35 is also an entry here. This one remains the same as 10:15. All right, I think 10:15 or 10:20, somewhere around there. So we'll leave that like that. Right. So, but as we start to go lower here, there are some things we need to think about. We're only just looking at buy side, right? But we also have some sell side liquidity to think about. I'll take this out. All right. If this is really Asia's high to Asia's low, so peradventure that level that I'm looking at on that high that I want to see get taken out. Peradventure that's just overzealous and the market is, very, very bearish and ready to reach for lower prices, then this would be, levels to consider. The Asia's low of today, and which I think, price would ultimately still get here. And it wouldn't be long that we come back, into the lows again. I'm thinking about 3,400 for gold, that we return back into 3,400. We're currently at 3,949, right? And just like while we were at 5,000, some people were saying, no, we can't get back down to 3,000. But we're there now, right? So it won't take time that we come back down there. That's how I'm looking at it. But how do we get in is really, really very important. So these are also levels that we're watching for. So we have this one here, which is one I would like that we come here, then we return here. Now, if we just, again, like what we did yesterday, I don't think that will happen. But if we do the same thing where Asia session just expands and takes out this low and takes out this low, you'll probably not see me there. I'll probably not be in that trade, but I will be watching. I'll be watching to see what happens. I think I have my engagements, held up until probably Thursday before I actually go in and really, really look for a play. Thursday after NFP, I would really be looking to see what happens and be hunting for opportunities. I'll let tomorrow go because a day before a high news release is a day where, you don't want to be pushing, crazy buttons, right? But yeah, this is how we're looking at this week. We're still bearish, right? And I hope you learned something from this one. I hope you learned something from this one. If you did learn something, give the channel a thumbs up, right? You see a little thumbs up button there. It's kind of like how we grow. This is still a very 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 small channel. We are 62 subscribers, and I'm excited about that, right? But we can actually get this good information to more and more people, right? The free Telegram community is going to be linked in the description. And then, yeah, I'll see you tomorrow. Bless up, family.